Are you going to set up a company, yet can't decide between an LLC or an S-corp? Many people are confused about the differences between these two types of businesses and don't know which one is right for them. In this video, you will learn which of the two types is best for you. Knowing which is which and how they both work are very important, especially when you're going to start your journey in this wide world of business. Welcome to EM3 Financial Freedom Strategies, where you learn how to manage your time and money to achieve financial freedom. If you want to know all the essential details that can help you keep yourself up to date about finances, wealth, and investments, then make sure to watch until the very end. Do you know that companies overspend on taxes every year as a result of the entity that they choose? Most individuals don't consider the tax implications of the companies they pick. Therefore, just picking the wrong entity really costs them hundreds or even thousands of dollars. Before going through a deeper look, let's begin by identifying what S-corp and LLC are. An S-corp or S-corporation is a type of corporation that is taxed like a partnership. It is a type of pass-through entity, meaning that the business itself does not pay taxes on its income. Instead, the income, losses, deductions, and credits of the S-corp pass through to its shareholders and are reported on their individual tax returns. This means that the shareholders are responsible for paying taxes on their share of the S-corp's income at their individual tax rates. S-corps are also subject to certain rules and requirements, such as having a limited number of shareholders and only allowing certain types of shareholders, such as individuals and certain types of trusts. On the other hand, an LLC or limited liability company is a type of business structure that provides personal liability protection for its owners, known as members. This means that the members are not personally liable for the company's debts or liabilities, and their personal assets are protected. LLCs are considered a hybrid between a corporation and a partnership, as they provide the personal liability protection of a corporation and the pass-through taxation of a partnership. LLCs also have more flexibility in terms of management structure, as they can be managed by their members or appointed managers, which allows for more flexibility than an S-corp or a C-corp. Additionally, LLCs have no restriction on the number of members or their citizenship, which is a feature that S-corps do not have. If you look deeper at what was mentioned, you'd see that LLC and S-corp are very similar, with both having liability protection and pass-through taxation. This is one of the reasons why people are so confused and unsure about which to pick. So, what makes people think hard about the two types? The main advantage of having an S-corp rather than an LLC is the money saved from paying taxes. You see, if you set up an LLC, you will have to pay taxes according to all your profits. Suppose that, as an LLC, you have $100,000 in profit. You must pay 15.3%, which is equal to $15,300 worth of self-employment taxes. This does not include other taxes like federal and state taxes. However, if you applied as an S-corp, you won't be taxed according to all your profits. Instead, you will be taxed according to the salary you paid yourself. Of course, it has to be reasonable, meaning if you're a doctor, your salary should be in agreement with the salary of other doctors in your area. This requirement of having a reasonable salary ensures that people don't cheat the system and only pay themselves a very low salary while giving out big distributions. Now let's go back to the example illustrated before. If you were taxed as an S-corp, instead of $100,000 being taxed with 15.3%, your salary of, for instance, $60,000 will be the only one accounted for in self-employment taxes. Therefore, instead of paying $15,300 worth of self-employment taxes, you will only pay $9,180. Pretty neat, right? This is why many business owners opt to get taxed as an S-corp rather than an LLC. You must be wondering, if being an LLC makes you lose more money than an S-corp, then won't it be a sure pick to just go for an S-corp? S-corp status may be right for you if you want to distribute all of your business earnings and do not intend to reinvest the money in your company. On the other hand, if after giving yourself a fair wage, you only have a few funds left to pay yourself as a distribution, then it might not be worth the extra labor and paperwork to be classed as an S-corp. You should take this into consideration because S-corps are generally considered more expensive and complex to set up compared to LLCs. If you pay low distribution, your money saved from taxes might not be able to offset the costs of maintaining an S-corp. S-corps are subject to more formalities and compliance requirements compared to LLCs, such as holding annual meetings and keeping minutes of all meetings. This means that there are more legal and compliance costs associated with setting up and maintaining an S-corp. Additionally, the cost and complexity of forming an S-corp can vary depending on the state. Some states may have additional requirements such as franchise taxes, annual reports, and specific compliance requirements that will add to your expenses. In contrast, LLCs are generally considered simpler and less expensive to set up, as they have fewer formalities and compliance requirements, and fewer restrictions on the number of members. Keep these things in mind when choosing what type of business entity you are going to set up so that you can make the most informed decision possible regarding your business structure. Still, after going through all of these details, if you already decided to become an S-corp, then keep in mind that if you want your S-corp to take effect in the current year, you should submit all the necessary paperwork before March 15. So, what are the requirements needed to be met in order to become an S-corp? For S-corps, they are generally required to have no more than 100 shareholders who must be U.S. residents. The company should also be located in the U.S. and must only have a single class of stock. Thus, to make the process smoother, make sure to comply thoroughly with the requirements of your state. This should be done several months before the anticipated date for your company to become effective as an S-corp. This way, there will be no problems with filing deadlines or paperwork problems. That is all for this video. As always, we in EM3 wish you the best of luck. We hope you enjoyed watching this video and don't forget to give a thumbs up if you liked it. Please subscribe if you haven't done so, especially if you're looking for tips, ideas, and other related information that can help you achieve financial freedom, stability, and independence. Thank you for watching and see you in the next video.